Good morning everyone, welcome back to my YouTube channel. This is Smart Trader. So I have come back today with a new video. So I remember in my last video on entry modules, I have covered the first part of entry modules, and I told you that there was a second part coming up. Because of my personal break, then I didn't make that video so far. So today I've decided to come with a new video, and I have found an even better idea. I want to take you from the beginning all the way from the analysis to your entry modules. Okay, so we'll be going through each of these steps here in upcoming videos until we reach the entry module. So we will have a more complete guide compared to just making the second part of the entry modules. Okay, so as for today, we're just going to make a global analysis or talk globally about all of these steps that you see here, and then in the upcoming videos then we'll cover each of these steps here in depth so that you guys can deeply understand how to manage properly all of these steps. Okay, so at the end of this series of video, we will make a trading plan. We'll put all of these things together to make our valid and solid trading plan. So as for today, let's just start with how to make your analysis, and later we're also going to talk about the management. There are many types of management, so we'll cover that in a minute after talking about the analysis. So in trading, no matter your strategy, you will always encounter two types of analysis. We have the technical analysis and the fundamental analysis. So most of the traders are used to the technical analysis because all of the strategy relates on the technical analysis. So the technical analysis is exactly what it sounds like, just a technical thing that you just open up your chart and look at the market, and then mark your area of interest and something like that, and then wait for the market to mitigate your areas, and then you take your trade. So this is the technical analysis. But there is also the fundamental analysis. So for now, we'll start with the technical analysis. We'll go in depth through the technical analysis. So the first thing you need to do in your technical analysis is just to make a top-down analysis from your higher time frame all the way to your lower time frame, and your time frame depends on your trading style. Okay, so there are scalpers, there are day traders, and there are swing traders, and their time frame are completely different from one another. Okay, so for scalper, for example, your main time frame is 5 minutes and your entry time frame is 1 minute, and for day traders the main time frame is usually 15 minutes, but it can be anywhere from 5 minutes all the way to 1 hour. Okay, and then your entry time frames should be somewhere around 1 minute and 3 minutes maximum. Okay, and for swing traders, it's any time frame above 1 hour is for swing traders. Okay, so after you have identified your main time frames, then you have to start making your top-down analysis, starting from your main time frame, your higher time frame, and then dropping down to your lower time frames, and this is called your structure mapping. During your top-down analysis, you will be identifying things like break of structures, change of characters, inducement, and your area of interest. Your area of interest are things like order blocks, single counter order block, your order flows, and so on. Okay, so these are your area of interest. So if the market comes back to that level, then you just need to wait for the market to give you an entry confirmation, and you can use one entry modules, then you can definitely take your trade. So this is it for the technical analysis. This is typically how does the technical analysis work. You just need to identify your trading style, your time frames, and then make your structure mapping by identifying all of these things here, and then make your entry here. Okay, so we also have the fundamental analysis. So most of the traders that doesn't even care about the fundamental analysis, and the reason is that they probably don't know how to make their fundamental analysis. So I've sorted out a few of the main aspects of fundamental analysis that you should keep your eyes on. So first of all, we have the sentiment and the news. Okay, so we'll start with the news. So we have the high impact news. You have always to keep an eye on the high impact news, and the high impact news are like NFP, the CPI, and the interest rate decisions. Okay, so these news, when they're released, they give a really high impact to the market. The market become really volatile. Okay, so you have to watch out for all of these events. You can find them in the economic calendar. Okay, so it will help you to keep in mind the news that are going to be released in a given day. Okay, and we also have the soft news. Okay, these are the type of news that doesn't immediately affect the market, okay, but it affects the market over a longer period of time. Okay, and we also have the sentiment, the forex sentiment. We have the market maker sentiment and the retail trader sentiment. So don't worry about that. We'll go through each of these steps in depth in upcoming videos. So this is the part of the analysis, okay, the technical analysis and the fundamental analysis. Okay, so after that we also have the management, and there are many type of management. So we have the risk management, the trade management, and the emotion management. Okay, so first of all, you need to have a proper risk management. Okay, and the risk management comprises things like your risk per trade, your win rate, and your risk reward ratio. Okay, so for the first one here, your risk per trade, it usually varies from around 0.5% all the way to maximum 2%. Okay, so this is your risk per trade. How much are you risking per trade? Okay, and you also have your to reward ratio and your win rate. These two aspects here are highly linked to each other. Okay, so your risk reward ratio will depend on your win rate. Okay, so refer to the table that I've posted in my Telegram channel to understand how to properly choose your risk reward ratio depending on your win rate. Okay, so this is the part of the risk management. We also have the trade management, which is here. In the trade management, it just comprises the rules that you should follow as your trades evolves. Okay, are you taking partials, or are you moving your stop loss to break even? Or if the market break a certain level, then are you switching to your break even? Okay, or if the price action indicates you something like the market is willing to reverse, then you will close your trade. Okay, so this is how you can manage your trade. Okay, so this is part of the trade management. And we also have the emotion management, which is the most important part of all. Okay, without a proper emotion management, all of the things here, even if you master all of these things above here, they will not work for you just because of your emotions. Okay, so the most important emotions that you should master is your discipline, your patience, your FOMO, greed, overconfidence, and revenge. Okay, so the discipline is just the commitment to your own rules. Okay, let's say you have made a rule. You are a scalper trader, for example, and a rule is to just trade in 5 minutes, and your entry confirmation it will be in 1 minute, and just you ended up in trading in maybe 1 hour. So you have just broken your rules because you are a scalper. So you are not supposed to look at 1 hour, for example. So this is part of the discipline. You also have to respect your risk per trade, your risk reward ratio, and your win rate. So this is all the part of the discipline. Okay, it's just a commitment to your own rules. You also have the patience. You have to be patient, wait for the market to come to your levels, and not be in rush to take a trade. Okay, you also have FOMO, which is linked to patience, because FOMO is just the fear of missing out. So the fear of missing out an opportunity will push us to take a trade even if the market doesn't come to our level, to our area of interest. Okay, so this is the fear of missing out an opportunity. We also have greed and overconfidence, which are linked together as well, because the greed will push you to take higher than expected risks. Okay, and the overconfidence as well will push you to take higher risks, because you just feel very confident, and you just say, yeah, this trade will definitely work for me, so I'll risk a little bit more. So this is the overconfidence, and you end up in greed. So you take more risk than expected, then the market will end up taking out your stop loss maybe, and this will lead you to revenge trade. You'll want to recover your loss, and then you will be revenge trading, and then take a loss again. So this is the most important part of all of these aspects here. So if you doesn't manage your emotion properly, then all of these aspects about here will not work for you. Okay, so this is just an overview of what we'll go through in upcoming video. So in the next video, we're gonna talk about the technical analysis, and another video we'll talk about the fundamental analysis. Another one we'll talk about the trade management in general. We'll talk about management in general, the risk management, the trade management, and the emotion management as well. Okay, so this is just an overview of what we'll be doing in the upcoming week. So do not miss our upcoming videos. Make sure that you subscribe to our YouTube channel, and then stay tuned, and see you next time.